Good afternoon, everyone. Hey guys, this is Bruce Marshall from Simpler Trading doing the nightly market update for Tuesday, December the 26th. I usually do Wednesday night video, but tonight is Tuesday. We were off yesterday, of course, for the Christmas holiday. Hope everyone had a fantastic holiday and enjoyed time with friends and family and all the good food and things that go with that. It was a much needed rest, and we are coming into the final stretch here for the end of the year. And today I've got the ES up here and the NASDAQ and the RUT. And today we had another push higher today. Not as much gusto, if that's the right word, as we've had. It was kind of slow and steady, and then we got a kind of a I don't know what caused this. I didn't see any news. Got to push higher and then a fade back down. That's been kind of what's happening lately. Same thing with the NASDAQ. Same thing with the RUT. That's what's been happening a lot lately. And I want to talk about kind of right now the biggest thing is, today's Tuesday. Where are we going to end up the end of the year, which is Friday on December the 29th. And obviously, I have been targeting, bullish for months now, and started maybe 2 months ago, 3 months ago, was looking at 4,600 to 4,700, kind of moved that up, 47, 48, then really kind of moved that range up from 48 to 49. And in anticipation of Santa rally and all that kind of good stuff. But I'm beginning to wonder if we got the Santa rally last week and that was kind of it. I don't know, but let's look at the charts and maybe we can get some ideas and figure out kind of where we're going. So let's look at a 20-day chart, and as you can see here, chop, 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 chop into that Wednesday was when the last Fed meeting, and right there was the Fed meeting. This is the ES futures, and this was a rollover change of contracts, that gap right there. But we're still, we're optimistic that the Fed is going to be dovish and give us some rate cuts and all that good stuff, right? And they did. They didn't give us rate cuts, but they were very dovish, and they basically told us that rate cuts were back on the table for 2024 in lowering their target rate, which means about 75 basis points lower than we are right now for a target rate, and which implies most likely we get 3 25 basis point cuts. So when does that happen? Who knows? But I don't think it'll be in January. I'll show you the calendar here in a second. We'll talk about that. Well, I'll go ahead and show you that now. I don't think it's going to be in January. We've got. I always like to look ahead on the economic calendar, see what's going on. On next Friday, we've got payrolls, the 5th, January 5th. I believe the first real earnings day that of any significance is that, I believe it's that 12th. I think we have a lot of the JP Morgan, Bank of America, all the banks kind of kick off that day. Don't forget the 15th is a holiday, a market holiday. And then we've got, I forgot, on the 11th is CPI, and on the 12th is PPI. Got a lot going on this next month, right? So CPI, PPI coming up. And I don't think that this CPI or PPI is going to have near the impact as the last 2, 3, 4, 5 have had, because we're kind of past the big surprise from CPI standpoint now, meaning that we get inflation was coming down, and then you get a CPI where it spikes up dramatically or something. We're kind of past that right now. I don't think that's even a big possibility. So I'm not as worried about CPI and PPI on the 11th and 12th as we have been for the last, say, 6 months. Again, market holiday on the 15th, and then Fed meeting on the 31st. Now, I don't think the Fed is going to have enough time or data to do anything on this Fed meeting. I just don't think there's going to be any need to change course from what they said at the last Fed meeting. And guess what? No Fed meeting in February, so the most likely first chance will probably at the March Fed meeting. Maybe, maybe not, but I was thinking until before this last Fed meeting, the prior Fed meeting, I was thinking it'd be fall. It'd be further out in the year in 2024 before we start getting any kind of rate cuts, but maybe we get one. Maybe they go ahead and throw one out there and then scatter a couple more in through the rest of the year. Who knows? But anyway, so that's what's coming up on the economic calendar. And as we get back here to the chart, you can see again contract change there on the futures. Fed meeting here where they said that target rate's going to come down, and then we're off to the races, right? And then out of the blue, and I'm targeting this to go higher into end of the year at 4,900. I'd raised from again 4,600, 4,700, 4,800. I was kind of targeting 4,900, and then we got that big that's almost 100-point drop. Boom. Basically gave all that back up, right? And that kind of reset our trajectory here from landing up here to kind of landing down here, right? Most likely. So I'm not as optimistic at 4,900 as I was. And I said in last week's video, if you caught that, it's kind of funny how this stuff works. If you trade a lot, you know exactly what I'm talking about. So I put on a bullish trade, and guess, if you look at this chart, when would you put the most bullish trade you could put on? Of course, you put on right there, right? And I did. Let me show you the trade. It's kind of funny. I did a 4,900. This is for this Friday, 29 December. 4,900, targeting 4,900. Now it is funny because we got tiny risk on this trade. It was 35 cents for this trade, right? And I did a 29 December, a 2 January. So basically 35 cents, 10 contracts. I've got $350 of risk on this trade. It's a lotto ticket, right? If we end up here, we risk 350 bucks, right? If we end up here, that's about 15,000. Would you risk 350 to make 15,000? Oh, of course we would, all day long, right? But it's a lotto ticket because, may or may not work. That to me felt like the best structure to be bullish without a lot of downside risk because we're very, very extended. Everybody knows we're extended. We could pull back at any time. And again, I put this trade on like literally, 30 minutes before that big flush down, and you have to laugh at stuff like that. If I would have done a regular butterfly and said, I'm going to target 4,900 up here, and we've got 3,500 of risk, that would not be so funny, right? If this was $3.50, but at 35 cents, and also the structure of this gives you a lot more gentle slope here coming into the trade, so you don't have to get here to make money. You just got to get in this kind of part of the curve to make money, which could be 48.50. See, at 48.50 it's still worth like 2,500 bucks. Pretty good. Anyway, I put that on last Monday, and then on Wednesday I was looking at this going, well, I want to put something that's a little bit down here just in case. So I put on, and I posted these trades. I did a baby 4,800 butterfly, 47.75, 48, 48.25, 25 point wide butterfly here. So if we end up at 4,800, that's still worth about 1,900 bucks. So that wouldn't be horrible. And I've got $600 of risk. Again, would you risk 600 bucks to make, say, almost 2,000? Yeah, I'd do that. That's a pretty good risk reward. And this is a much higher probability of being here, in this butterfly. I'll isolate that. Regular butterfly, not a broken wing. So again, it's about $2,000 worth of profit in that thing, and together that trade gives you profit from basically 47.80, kind of about where we are, all the way up. So anywhere in here we land, we'll make a little money. So it's pretty good. And I was thinking today, and I talked about this in the main room session, if we rip up here, say tomorrow, I may even kind of backstop this with something, a vertical, put diagonal, whatever. I don't know. And I don't know if I will or not. probably won't need to, but again, this whole out of left field flush down can happen. It can happen anytime for any or no reason at all. So I just don't want to get too gung-ho bullish. I've been gung-ho and bullish for months and months, and I'm getting a little nervous to continue buying the higher and higher and higher we go. We're getting very extended here. Everybody knows that. You can see that. So I will stay bullish into the end of the year. Our expected move on the rest of the week, let me look right here. I'll show you. Is 44 points. So, technically that gets us to 48.25-ish, maybe 47.25, kind of ballpark area. So I just don't think we're going to get to 4,900. And Santa Rally may come again, and we may just take off. I don't know. But again, I'm getting very nervous about this. And I was showing this. I pointed this out. All these, everything we're extended. I mean, we are well overdue for a pullback. Even if, and I'm not talking about this. I'm talking about pull back to the mean, to the mean, to the mean, to the mean. Just pull back here. Then maybe we keep going. We've got earnings coming up about third week in January. Again, Fed, all kind of stuff coming up. So we could keep going. It would be much healthier for the market if we pull back. Let me show you the most extreme example, which is kind of crazy, is the diamonds. I mean, look at that. This is a giant air pocket to fill. This is going to come back down, but I don't know if this can keep going and these keep going as well, and then they kind of meet in the middle up here somewhere. I don't know. But this doesn't, you don't keep, and this is across the board. Every index is like this, right? RUT, NASDAQ, diamonds, whatever. S&P. This just is not sustainable, and I don't think, for much longer. Don't want to short it. I'm not short. I don't have any shorts on right now. I will start. I've been looking. I've got a couple things teed up and ready to go at moment's notice, but I don't have anything short or fading this yet. But I will be putting some stuff on probably for mid to late January, or February, even if it's just to fade it for a day or two, And I will say this again, if we pull back and we pull back enough, and say, for example, I'll just do the ES here. If we pull back here, these are 34 EMAs. We pull back here, I will be buying it hand over fist for the next move higher, right? We're going to go higher in 2024. The Fed's already going to kind of make sure that that's going to happen, right? So I'll be a buyer on a pullback, but we need to pull back for the strength and the health of the market. So right now it's a really tough call. It's really, really, really tough to be buying it up here, unless you're using some low risk stuff like I'm showing you on those diagonals. Just got to be really careful here, and that's across the board on anything. But we're not quite at short the market period. There's nothing telling me to short the market other than we're kind of extended here, and we know it's going to pull back, but I just don't want to step in front of it yet. Also, one last thing here: if you've got stocks that trade on the NASDAQ, and that's any of the Mag 7 stocks or anything like that, Nvidia, whatever, it can look great, but if the NASDAQ pulls back, the money flow will come out. And so be careful buying individual names that trade on some of these indexes. But I'm looking, we're looking for the honey badgers, and we're looking for things that that still look good, and they're not that, they're few and far between right now. So be careful. All right, well, let me wind it up here. It's going to be super interesting to see where we end up the week. A lot will be determined in the next day or two, because if we pull back, what I would like to see is, for me, and I'm talking my book here, I would love to see us, it's the ES, I would love to see us pull back down here for that run back up into 4,800. I'm most positioned around 4,800. SPX, not ES, but same, the same concept here. I'd love to see us kind of take a break for a day or two, and then, right here we're running up against resistance right now. We pulled back here for that run into Friday into 4,800, and it looks like again the number is going to be 48 according to expected move. 48.25, 4,800, 48.25 on the upside, 47.25 on the downside, kind of that range. I don't know. We'll see. We could get anything in between or outside of those parameters as well. So just be nimble, and that's what I'm looking for. So with that, let me wind it up here. Hope that helps. Hope it makes sense. Let's see what happens. Join me next week on Wednesday. We'll talk about a game plan for January. I'm very excited about next year trading. I think it's going to be a good year with some rate cuts. We should get in a trending market, and we won't have to do as much guessing as we have been doing this year. If we can get back into a trending kind of market, and I think we will. So anyway, that's what I've got. Hope you guys have a great rest of the week. I won't talk to you before New Year's, so have a happy New Year. Enjoy the long holiday again this coming weekend, and we'll have fun into the end of the week. So thanks for the time, and I'll talk to you guys soon. Thanks. Take care.